Free cash flow. Ultimate hack to company health. Free cash flow is what we are discussing in this video. What is free cash flow? What insights does it give you into a company? And how can you use a company's free cash flow to make better trading and investing decisions for yourself? Let's get into it. This video is an accompaniment to a guide on selecting stocks to sell cash secured put options on. In the description of this video below is a link where you can download that guide for free. And at the end of this video is another link to another video. It's about 23 minutes long that goes in great detail of how to sell cash secured put options on. And if you're really impatient and you don't want to wait until the end of the video, then right here, right now, is a link to that same video where you can learn how to sell cash secured put options. But for those of you that have some patience and you're excited to learn about free cash flow and how it's the ultimate hack to company health, let's move forward. What is free cash flow? Free cash flow is the money left over after a company pays its bills. Free cash flow equals operating cash flow minus capital expenditures. And there's all other fancy jargon terms that accountants come up with. It's basically the amount of money left over after a company pays its bills month to month. What does free cash flow tell you? Well, it gives you an idea of at least two things about a company. Maybe more, but at least two. One, how well a company generates income. Two, how responsible the company is with its finances. Is there enough money to pay the bills? Each month, a company brings in money. It can have less money than it needs to pay its bills at the end of the month. It can have just enough money that it needs to pay its bills at the end of the month. Or it can have more than enough money than it needs to pay its bills. More free cash flow is better. When a company has money left over at the end of the month, after paying its financial obligations, it is in a stronger financial situation. Extra money gives it more options. It will have more abilities to handle various hardships that might arise. Yahoo Finance. Yahoo Finance is a website that allows you to see a company's free cash flow for free. We're going to look at an example of free cash flow on two different companies. We will be looking at two companies that have been kind of in the news in the last 36 months or so. One being Apple, the other one being GameStop. Let's take a look at them. Now we are here at finance.yahoo.com. And we are going to go to this search bar and put in the ticker symbol for Apple. Now Apple's profile is pulled up and there's all types of data here. But we're going to look through here to find what we need. The first thing we'll do is click the Financials tab. Now we want to look over here. We are looking for free cash flow, so we are going to click the Cash Flow tab. Now we scroll down and find free cash flow. So we see most recently Apple has a considerable amount of free cash flow. With a lot of money left over at the end of the month of paying whatever obligations Apple has, it's in a strong position to weather financial storms. It has a large degree of financial solvency. Let's take a look at GameStop. Same thing, company profile comes up, and we are going to go for that financials tab under here. This is the spot where you're going to find all types of financial information. Again, it gives us options on the financial statement, income statement, balance sheet. Cash flow is what we're looking for. Let's see what GameStop has. Ooh, looking pretty bad, huh? Comparing these two companies, Apple had an extremely large amount of free cash flow left at the end of meeting financial obligations, whereas GameStop doesn't even have enough money to meet its financial obligations. What insight does that give you into the financial solvency of these two different companies? Free cash flow. It gives you a lot of insight into the health of a company. It gives you insight whether it is going to be able to weather financial difficulties, and it also gives you insight into if you should invest your money in the long term, or with what we're specifically looking at, selling cash secured put options. One of the biggest risks that we have in selling cash secured put options is being assigned a stock, taking ownership of a stock, and then having the stock go bankrupt. So between Apple, that has a lot of free cash flow, and GameStop, that has negative free cash flow, which of those would be in a situation that you would have a higher risk of the stock going to zero on you? This is a way that you can use free cash flow to help figure out what is a good stock for you to be selling cash secured put options on. Again, in the description below of this video will be a link to download that guide that will help you select stocks to sell cash secured put options on. There's also another download from that same link that you'll get 3 stocks that I personally sell cash secured put options on. At the end of this video, you might even see it popping up right now. There's a link to selling cash secured put options to generate income. And there's all types of links around. Click on them. You guys have a fantastic day, and I hope you make wise financial decisions.